Hello, good morning, everybody. I hope you can hear me and I hope you can see me. I do apologize for the late start. We just had some technical issues, but I want to really get started straight away because there's lots to look at. And let's just get started here. Right. Anybody in the chat, just please let me know if you can see my charts, please. Okay, cool. Right. So look, again, apologies for the late start. For those of you who have just arrived, we're going to be doing these on a regular basis every Tuesday and every Thursday around 8 o'clock London time. So we're going to get into a bit of a pattern in terms of looking at market structure, looking at potential trade setups, and how I can help you with any issues you may have with your own trading. But before we start, I just want to share a little PowerPoint presentation, which just covers a few important things that we need to cover. And let's get started on that. So those of you who have just joined us, my name's Anil Kumar. I do want to emphasize that this presentation, this whole hour will be for education purposes only, and it's not intended as investment advice. Please do take a moment to read the disclaimer because it is important and mandatory. And so what are we going to cover today? A little bit about myself. We're going to do some market analysis. And by the way, I am always open to requests. If you have a particular currency you want me to look at or a particular stock that you want me to look at, please put it in the chat and we can pull those charts up a bit later on and start to do the same kind of analysis that I'm going to teach you, during this period. I think I have a question. If you will just bear with me with the questions. I want to make a bit of progress on the presentation, and then we'll go into questions a bit later on. After we've done a bit of analysis, I'm going to show you how we look for trade setups using our Zenfinex Plus tools. And then a bit later, I'm going to show you how to access the tools. And we're going to look at some of the setups in the Plus Zenfinex, and we're going to try to see if any of them make sense from a market structure perspective. And so what are we going to cover? We're going to cover, depending on which has the most movement, we're going to look at the euro dollar, the British pound. We're going to look at the UK index 100, gold, oil, and really any other instruments that you might be interested in. So let's just go straight to the charts and start digging in a little bit deeper in terms of where everything is. And, the purpose of this webinar really is for you to kind of see how I look at markets. And please, will you just confirm that you're seeing charts, by the way? Just want to make sure that, are you seeing my charts or not at the moment? If somebody can just put something in the chat. We can see it, not at the moment. Share my screen. Okay, just bear with me for a second. I want to make sure that we're all looking at the same screen. Right, I'm pretty sure you have the charts now. So let's just move some of this out of the way. So what am I doing? Right, so what I'm looking at the moment is our MetaTrader 5 platform. And the MetaTrader platform is something that connects through Zenfinex to receive market data. Those of you already trading will know some of this is pretty elementary stuff, but I want to make sure that any of our participants that are brand new, that I try to give them a bit of guidance as well in terms of what we're looking at. So let's just see if I can move this out of the way, and we'll start looking at charts from a long-term perspective. For some reason, I'm looking at the New Zealand dollar, but I want to add gold And the way to add instruments to MetaTrader 5, you click on this $sign and we look at metals. And I want to have a look at gold, and we'll do some detailed analysis. Because I know a lot of people trade gold, and it's quite a useful instrument to look at. And so the way that I start looking at charts, and at the moment, all you can see is lots of squiggly lines, et cetera, et cetera. And that's not really helpful if we're looking for a trade setup. The way that I always start by looking for a trade, I go to the longer time frame. And we're going to start by going to the weekly time frame. I'll remove all the drawing tools that I have at the moment because this was for another exercise. So let's remove the current lines, and I'll show you how I draw my lines, which may be useful to you. Let's get rid of them one by one. And we'll start with an empty chart. Right, so here we have the price of gold from a weekly perspective. So we're actually looking quite far back in time. I just need to move this toolbar thing out of the way for a second. It's hard to do this. Okay, cool. And you can see here, we're at a very interesting point in gold. We are hitting levels of resistance, which go back all the way to 2019. And I think if I went back to monthly charts, you'll see we're hitting sort of all-time highs, you know, this level here, around 2000, 2040. I think it went a bit higher than that. I'll explain why my lines aren't exactly at the tip, because what I try to do is I try to look for turning points. And around here is where I expect the market to do something. And we're going to look at what that something is in a minute. So this is from a weekly perspective. I will put another support line, unlikely when I get anywhere near it, but it starts framing our gold chart. I then drill down to a weekly perspective, and we'll look at the weekly side of it. Our monthly lines are already there, but we can see that from a weekly perspective, since about sort of, I don't know, last year, towards the last 2 months of last year, it found a bottom from a weekly perspective and started its journey upwards. It's now hit this level of resistance, which occurred you know, earlier in that year and also in 2020. So from a pure visual perspective, we can see gold really is trading in between these two ranges from a weekly perspective. What we now want to start doing is looking a little bit closer to these levels and drawing newer levels, which will help us in identifying trading opportunities which are more current. So again, we have the monthly. We can see that we have a level of support at 1805. I'll just move that down a little bit. And why is that important? It's important because if we go back all the way, you know, to the beginning of last year, we can see that markets moved up, retreated, found a level of support, stayed above this line for, you know, quite some time, broke through it, and then this level of support has turned into resistance, found another level lower, and again at the 1830 level, 1813 level, we can see that there was more hesitation to go up. Once it broke it, it came back, revisited, and found this as a level of support. So we can see that this 1830 is quite an important level that we should sort of note mentally. How does that help us in our current situation? So if I now look for where the last level of resistance was here at 1940-ish, maybe 1950, I can't see it that clearly. We found that prices broke through it and then found that as a level of support. So we're kind of trapped in this level here. And I'm actually going to draw another level of resistance here. So now what I've done, I've captured price movement for the last, I don't know, 20 bars, 20 days, something like that. And really what we're trying to now do by looking at the charts in this way, we're saying, is the market going to go up or is it going to go down? Now, currently, we're right in the middle of that range. And those people who have been to some of my other seminars and webinars, I tend to look for two things. The market's either going sideways or it's breaking out in a trend. We had a small consolidation area here, broke out, and now it's finding this as a level of consolidation. So depending on our time frame that we want to trade, whether it's a short-term time frame, you know, whether we're intraday or whether we kind of from a longer term perspective, just by looking at these charts here, and I'm going to zoom in a little bit here, we can see that markets are trapped between 1950 and 2047-ish, right? These are just broad numbers. And if I want to take a trade based upon a trend, I would have to have a trend develop. At the moment, we're smack bang in the middle of this range. So this particular instrument, I wouldn't trade until we break the top above 2047 or we break below these. Now, even if the market breaks above this high, I would still be cautious because what tends to happen or sometimes happens, markets will try to break through previous levels of resistance, poke its head through, and then come crashing down. So I always wait for a retest. And what will often happen is the market will either break through this level of resistance, come back and revisit. I prefer to take the trade on a revisit, even though the market may have been charging upwards. And this is where sometimes traders get caught out, where we have a breakout and people jump on the breakout and very shortly thereafter, it reverses and goes the other way. So I want to make sure that any breakout of gold above 2047 is a proper breakout and not just a fake out. Fake out meaning, if you look at this example here, prices poked through it and then came back down again. I want to avoid that. So based upon, you know, this chart, is there any questions that people want to ask me before I go on to another instrument? I'll have a quick look on the chat, see if there's any questions. Right. Does anybody have any questions on gold and how we could help you in sort of looking at price action to see, is the market going up or down? And if there are no questions, I'll just drill down a little bit further into a smaller time frame and just see if there's any way we can see any other opportunities that might be present. So let's now go down to the 4-hourly. And we can see by looking at the 4-hourly, let's get the chart over here. We can see our previous lines that we've drawn based upon the monthly and on the daily. And as I said, we're right at that crucial level of 2000. Right now it's at 19999. So indecision at the moment. And I would be reluctant myself to take any trades until I get some sort of indication that the market is either going to go up or down. We can see really for the last sort of week or so, a couple of weeks, after reaching this particular high, markets actually have tried to get higher and higher, but all they're doing is creating new lows. What I mean by that is that this particular low here, I'll put a cursor on it so you can see it, this particular cursor here, markets tried to rally from this point here, but couldn't get higher than this point here. Markets fell through. A good indication that there may be a turning point is where this particular low was penetrated and immediately rejected with a buyer bar. This tends to give an indication that there is a bit of strength trying to go upwards, because this rejection on a 4-hourly basis, is significant. So prices broke through this low here and rejected it and started going up. So I would expect the market And I wouldn't do anything, by the way, until these particular highs were broken. Because if this is still a continuation of this downtrend, let me see if I can draw that in for you. You know, there is a downtrend here, but with this strength, if this breaks above this line here and above these levels here and here, then there is a possibility that markets could come and revisit the 2046. And we'll have to come back on this on Tuesday and see what it did. And I'll leave these charts for us to come back on a Tuesday and you know, see if it's continued to go sideways or whether there is a breakout, whether it breaks this particular high or this particular low. I think I've got a question which, so I've got a question, anonymous. Are there any technical affected by fundamental and sentiment analysis? Do you also review this and mark on your charts anytime market shifted based upon fundamental news? That's a great question. First part of the question is, are technicals affected by fundamentals? We can look at that question slightly the other way around and say it's the fundamentals that move price and technicals which historically look backwards in time. So if the way that you phrase the question is, do technicals get affected by fundamentals? Absolutely, right? So the fundamentals on gold can have many factors. It can be things like, you know, inflation, interest rates, this situation in Ukraine. They're all affecting the price of gold because traditionally it's been used as a safe haven. And where stock markets are coming under pressure, people tend to move and rotate out of risky assets and put them into a perceived gold asset. So that's the fundamental side of it. Technicals will probably follow the fundamentals, but sometime after, because, you know, it should be noted really that technicals usually are backward looking rather than forward looking. And the other part of the next part of the question is, do you also review this and mark on your charts any times markets shift? Another great question. Do I mark my charts up? So for those of you who are new to my charts and what have you, I started trading in 1999, and predominantly I'm a technical trader, and more latterly, probably for the last 15 years, more algorithmically. So I do look at patterns and I look at technicals more than I do fundamentals, because again, you know, all the news, all the fundamental aspects are built into the current price. You know, people sometimes ask me, you know, what does the current price of gold reflect? Well, right now it's at 1998. That is the current value perceived by the world or the world of trading. And every bit of news is built into that price. If we have some new news, which may be in the next 5 minutes, in the next 1 minute, that will reflect in price. So price is always a current view of what the perception of the value of gold is at this moment in time, which can shift and change with new bits of information, new fundamental information, etc. So I hope that answered the question. Please ask again if I haven't sort of made it a bit clearer. We are going to look at some sentiment analysis indicators that you know, plus Zenfinex have, and we'll do that, you know, in about 15 minutes time. Are there any more questions on the charts before I move on to another instrument? And by the way, if any of you have any instruments that you want me to look at, it's always fun to look at you know, different charts and show you how I approach that. Okay, so we've done gold. My view on gold is that it's, at the moment, not easy to trade because it's going sideways. The short-term momentum is down, but more likely it's consolidating in this period, in this area here. Let me see if I can just mark it up a little bit. So currently, from a four-hourly perspective, it's consolidating all the way back for the last 3-4 days. It hasn't been able to break this high or break this low. And yes, you could, take a guess, which I wouldn't recommend. Is it going to go up or is it going to go down? I wouldn't do that. I would wait for more data, more information on this particular chart to see whether the likelihood is that the market's going to go up or it's going to go down. And from what we see right now, not enough information for me. Right, another question here. So, when fundamental news is released, do you immediately change any bias you have, bullish to bearish or vice versa? Or do you wait for the stop losses to be hit or immediately close trades? There are so many variables in that particular question, okay? So when I am in a trade, I have a perspective. I have a perspective that I'm either in an uptrend or a downtrend. And that perspective is based upon the kind of things that we're just looking at right now, from a weekly perspective, from a daily perspective, and from a short-term perspective. So any fundamental news that comes out that affects, in this instance, the price of gold has to be factored in, because if it is a shift, then the market will shift accordingly. And that's what I'll be watching for. Will I immediately react to it? No, not always, unless it's really, really, fast moving. For example, I think a couple of weeks ago, we had a CPI announcement, which was a little bit unexpected, and that did move gold prices substantially. But ironically, they moved all the way back to where they started after the news had happened. So I don't react immediately, but I will take into account how price action has reacted to any fundamental news that may have come out or not come out. I hope that answered the question. Let's see if there's any more questions before I go on to another instrument. Are there any more questions on gold before I move on? At the moment, as I said, just summarizing it, it's going sideways. I need a break from either the top side or the downside for me to looking for positions. Even if it did break through this upside, we have some resistance here and we have some stronger resistance here. And therefore, my risk to reward would have to be calculated into it. If, for example, prices moved up, hit this level here, and then came back down, then we have to factor in that this is probably the amount of scope we have for profits. And we have to factor that in. And then we would also factor in is, well, what is the risk to this particular trade? On other webinars, I will go into how I look at risk to reward and where I look to possibly place stops and targets. But in this particular webinar, I'm just going to run through. And, please, if you have any requests for me to do particular webinars on particular topics, please just email us, and I'll, if there's enough of you who want a particular topic covered, I can more than happily accommodate you, and we can set up a date and time for that particular topic. Right, I'm now going to go on to, let's have a look at the UK index. So I'm going to add the FTSE 100, which is an index. The way we get to the index is we click on here and we can see UK 100. And we say, okay. And then I can simply drag the chart over, and now we will have the FTSE 100. I do exactly the same thing, and I'm going to run through this one more time. So we look at the monthly perspective, and isn't it ironic that we're coming up to the same types of resistance that we are on gold? And I will do another topic on another day about correlation, how the dollar index, how commodities, how stock market indices, how currencies all correlate with each other. And it's a really interesting topic, because I often speak to traders, new traders who have positions either going against using correlation from another instrument, or they're doubling up on a particular instrument. And that's quite an important topic that I will cover in future. So looking at the FTSE 100, we can see we've got some resistance on a monthly basis. We can see we've had some support here. I'll now go to the weekly basis. We can see that this resistance still applicable, and we have some support levels here from the weekly perspective. And we can see that prices bounced off here. So I would class, it says 71.99, but it's probably 7,200 as being a level of support. It poked through and tried to get above the 8,000, but sort of almost immediately retraced from that. Thing to watch is that it actually went below this level here, but only marginally and for a very short period of time. And really, it's been going upwards ever since. So there's a lot more confidence coming into stocks. And if you look at the other indices from the States, the Dow, the S&P, they're also showing similar strength. That might change because I think overnight we had Tesla report its results, which didn't come out too good. And I think anybody who's looking at the Tesla charts, which I don't have on this particular MetaTrader, it tanked. And I expect either to be a small rebound when markets open on Tesla, but the outlook for Tesla doesn't look particularly good. And I think what shareholders are worried about are the discounts that Tesla are having to put on their cars to move the inventory, move the stock. And I don't see that changing for a foreseeable period of time. I mean, the car industry, going back many, many years, are a great indicator. New purchase vehicles are a great fundamental indicator for the state of the economy, because what do people do when things get a bit tighter, when interest rates get higher, when jobs become less available? They'll make cutbacks, and vehicles may be one of those. So it's worth looking at, and I won't go into that on this particular webinar, but the transport index, which is a really good indicator on the state of the economy, moving away from Tesla a little bit. The only thing that will change my mind on Tesla recovering in the short term will be some innovation. I think Elon Musk announced that he wants to introduce, driverless cars, I think this year, which I think, to be honest with you, is probably optimistic. I think we all want that utopian life where we can just jump in our car and it will take us wherever we want to. But I don't see that happening, for the next period of time, whether it's 2 years, 3 years, 4 years. So I wouldn't necessarily be a buyer of Tesla right now until that sort of innovation starts becoming much more visual in terms of the horizon. Okay, let's go back. So we looked at the weekly FTSE. Let's look at some shorter time frames. Let's go to the daily first, draw some markups. And those of you who are always looking for new trade setups and what have you, go through this exercise just so you can start getting a framework on what the current market structure is. Because if you take those lines away, they're just a series of zigzag lines, market going up and down, up and down. What I'm really trying to do, and I have been doing for many, many years, is just building a frame around current market, current price. And that aids me a lot in terms of, when I place my trades, which direction my bias is likely to be. So let's just draw some daily lines in here. So we see that there's a level here. So markets came down, found some consolidation, popped up, found that level to be not accepted, and markets tanked. So I expect this level to be an important level. In fact, both these levels here, which is at 79.72 and 80.31, they need to be broken before this upward continuation can continue. And right now, I don't have a view whether that continuation, I think generally speaking, as I mentioned, the outlook on stocks and the stock markets generally has been positive, certainly for, a couple of months now. And And I think that's based upon maybe the the inflation topping out and maybe some reductions coming on interest rates. I don't see those in the short term. This may just be some anticipation of that moving forward. So we can see we've been in a bit of an uptrend from a daily perspective. It's found a little bit of a topping pattern here. And what we'll be looking to do, and I'm just going to make these lines a little bit more accurate in the sense that we can see prices turned up from here. We're approaching this level here. We're only 30 odd points away from that. So it'll be worth watching to see what the price will do when it hits this level. Is it going to fall through, retrace some of this pullback, some of this upward trend? But the key levels that we're going to need to watch for is this level here and this level here. Oops, sorry, let me get rid of that. Let's be a bit more consistent with our lines. This level here. Sorry, I'm having a bit of an issue with this. So this upward movement started at this point here. Strong upward momentum came down. So this is an area we need to watch for markets either to bounce off here or to continue down, meaning that the end of this 2-monthly uptrend has completed. There's another level here. The reason why I'm drawing that, there's a small gap. Gaps are important. What I mean by gaps is that market closed at this level here and immediately jumped up. So this left a price gap between these levels, and that would be a good area for us to watch if this uptrend has actually broken or whether this is just a retrace as part of its cycling effect. Up, down, up, down, up, down. Is the next move up? What we need to watch for is things like this level, these levels here, and of course the top as well. Let's put those horizontal levels back in because they disappeared. And I think we had one here to capture this consolidation. So this consolidation broke away, gone back into that consolidation. And what we're now looking for is a breakout from this same consolidation area here. And if it's an upside, we're going to watch. If we do get into a trade on a breakout, we're going to watch and move our stops and targets when it reaches this level. But there's a chance that it could continue going up if this upward trend continues its upward momentum. So that's my kind of way that I look at charts, and and I can go deeper into it in terms of smaller time frames to get right into sort of scalping and day trading type analysis. I'll do that. I'll do a whole section on Tuesday on shorter time frame trading, literally looking for scalping setups, on sort of 5-minute, 15-minute time frames. Today really is much more market structure, looking at how markets are currently, given all the conditions that are sort of and data that's available to us. Just by a comment, put a comment if you want me to do sections on scalping and short-term trading. You just put Y for yes or no, N for no, and I'll get an indication whether I'll get some setups for short-term trading. If anybody's in the chat, please just put yes or no. Yes, that you want me to do short-term trading setups, or no, you're happy with the longer-term stuff. So let's see what people are saying. Okay, so we're getting quite a few yeses. So next Tuesday, I'll focus much more attention on the shorter time frames. Let's see. Okay, thank you, Samir. Excellent. Right, so any questions on the way, and I just want to reiterate, This is how I look at my charts, regardless of what they are, whether they're currencies, indices, futures, whatever they may be, because what I'm really trying to find is areas of consolidation and areas of breakout in trends, particularly for longer term stuff. For short term stuff, it's a slightly different approach, and we'll do that approach on Tuesday. Right, I want to go back to the presentation, just bear with me. And so we looked at gold, we looked at the FTSE 100. I won't have enough time to go through the British pound and euro dollar. If I do at the end, if anybody's got a particular request for a currency, I can look at that. But I just want to go to the next section of our presentation, which is, so obviously I'm kind of showing you how I trade and how I look at my charts, but obviously that takes time and experience to build up that knowledge. And one of the things that you can do is you can utilize the Plus Zenfinex tool. So do register for these free tools, which we're going to discuss now. And in those tools, we're going to have things like specific trade ideas for FX. We're going to look at featured ideas. So please, I'll give you a minute to sort of take a note of this. And I don't know if I can put this in the chat. No, I don't think I can. Please go to this tool section of Zenfinex and you'll get access to free tools, which we're going to look at right now. So just give me 1 second while I bring those up. So let's have a look at the Zenfinex Plus site. Can everybody see? Just put yes on the chat box if you can see the dashboard here. Let's have a look. This is the Plus Zenfinex. Just bear with me for a second. Let's get to the right section. Right, just bear with me for 1 second, please. I'm just having a little bit of trouble logging in. Right, I'm having a bit of trouble. Right, I'm having a little bit of trouble logging into this. Just bear with me for a second. Right. Right, I'm actually going to have to come back to that. I mean, we're getting very close to the 1 hour. I'm going to go back to the charts. Does anybody have any requests for any particular charts they want to have a look at? We'll come back to the Plus Zenfinex products on Tuesday as well. Does anybody have any questions on charts? Are there any instruments you'd like me to look at? I think I've probably got a few minutes to look at Let's just go back to charts. Yeah, let me just go to the charts and let's have a look at any particular currencies anybody wants me to look at while I'm here. I can look at anything that you might be in or that you might have any questions or any trades that you're looking at. I'm more than happy to help. Just put it in the chat box and say, can I have a look at X, Y, or Z? Right, cool. So I've got a request, look at the USD JPY. And the way we do that, just please confirm that you can see my charts. I think you can. Right, I'm just going to add JPY. Right, so let's follow exactly the same procedure as we do. We're going to look at the USD JPY, and I'm going to look at it from a slightly longer term perspective. Start with the monthly, see what it's been doing, and see what it might be doing in the future. So I think everybody can see the monthly. Might be better just to have the weekly up there. So let's have a look, have a discussion about the weekly. So the JPY has been massively affected by the US dollar. And this whole section here really was a result of, let me just draw a box around that so you can see what I'm talking about. This whole section here was mostly as a result of the US dollar and very little actually to do with the economy in Japan. So now that the dollar index has come off, it's had the same impact on the on the currency as well. Just let me get the chart going here. Let's get rid of that. And so what is happening? Let's do the same kind of principle we've been doing. We're on a weekly chart. We're going to look at these two levels here. So markets from a weekly perspective, after this breakout, if I just remove that a little bit lower, we can see resistance, broke through, resistance, formed support, hit level of resistance, almost came back to support. And now we can look at a smaller time frame where we can try to get an idea on what's going to happen next. So from a daily perspective, we can see that we had some resistance here. So prices came up, retreated. For a few days, hung around this level here, broke through, hit a high, came back down to this level of support, broke through the support, and now this support is acting as resistance because, since, let me just move this thing out of the way for a second. Since, September last year, it's retreated from its highs, and in December found a level of support here, and now is trapped between 126 and 138. And again, ironically, it's smack bang in the middle of this particular consolidated range. So what can we get from where we are now, and what can we assume or believe the next move will be? So let's just do a little bit of analysis. So this is the frame. So we've got a daily frame, which is saying the markets are trapped between this level here. We were in an uptrend for a period of time, which broke. That broke. However, the break didn't fall below this level here. So there is one argument to say that we still have a bit of an uptrend, and we can continue our trend line and say, well, this could be a continuation. So what it's done, it's found a level of support on our trend line. And I'm going to draw a channel, which might actually be more useful. I want to make sure I don't remove all my other lines like I have been doing. Just bear me for a second. So I want to get rid of this, and I'll draw a channel, because we can see that there is a channel around here. And so what does a channel mean? Channel is just really a slanted support and resistance. So look, prices came up, came down, hit the trend line or the bottom of the channel, bounced off it. And therefore, if, and the person that asked the question, you know, are you in a long position or a short position? Or is it just a general sort of, you know, where are we type of thing? Whoever asked the question on JPY, are you looking for a trade setup, or do you want just some analysis on where it may go from here? From my perspective, from a daily perspective, we're still showing strength, right? When I will believe that weaknesses come in is when these levels, let me use a cursor, when these levels start breaking. Right now, every time it went down, it didn't go below this level here, went up, went marginally higher than the previous high. This low didn't go lower than that. So from a pure price action perspective, there is still strength, okay? And we can see that, you know, strength possibly taking us to, let's just draw that a little bit higher, to come back to the 137 level and certainly test it and have a continuation of this channel going up and up and up. And so that's what I see on the JPY. I see a bit of strength, depending on whether you're looking to get in. If I was looking to get in, I would definitely wait for a bit of a pullback and then try to get a continuation up to the top of the channel. Bearing in mind, we've got some resistance here at 37.84 and some resistance at 38.75. I hope that answers the question. You know, we'll get more into detail and do, you know, put in your chat box, you know, any particular trades you might be involved in, and I'll try to give you like an unbiased perspective on where I think things are going. If I was going to look at a shorter term perspective for this, it's kind of following my idea that there is strength currently in this currency pair. We can see that there was a level that was created that hasn't been breached by this point or this point. So 135 might be an area, if I was looking to get in, two ways that I would be looking to get in. One would be, if prices broke out, I'd be looking for a pullback to take it all the way up to this level here, and therefore a continuation of the uptrend. If I wanted to wait for a bit of a pullback, I would make sure first, before going long, that this level here wasn't broken. What I mean by that is, I have to just bear with for a second. I would make sure that this level hadn't been broken. So again, consistent with all the other charts I'm looking at the consolidation area and where I may get a new trend develop. Currently, my bias is on the upside, found some resistance at 135.10. If it breaks that, there's a good chance that it will have another peak at this level and possibly this level here, if this upward momentum continues. The other thing that I've noticed is that it's probably at a Fibonacci level as well. We probably don't have time to cover that, but what I can see here is that it's the 0 here. We can see that it's literally smacked the 618. So from the high, which was back in March, to the low, which was in March 24th. It's hit almost exactly at the 618 level. Somebody may point out, look, but you're not at the bottom of the line. Well, it's the closing price that I'm actually interested in, because this looks like just a spike. So naturally you get a bit of understanding where to put the fibs. Is it at the bottom or is it at the main body? Again, we're going to be doing lots of these webinars. So these questions, can come, forward. Just bear for a second. So this level of 618 is significant because it will need to be broken before the strength continues. Often at 618 levels, you'll get a retrace, and what we'll be looking to do is see how it behaves around the 50% fib level and around this level here. I think I'm going to be running out of time very, very soon. I hope you've enjoyed this webinar. I'm sorry I wasn't able to show you the Plus Zenfinex products. Please do come back on Tuesday, because we'll be discussing more on short-term trading, and I'll show you how to find some trades using the Plus Zenfinex tools. And on that note, I'm just going to check to see if there's any more questions before I go. And I apologize if I wasn't able to look at the Euro GBP, but I think we just literally run out of time. Do make a point of coming to these on a regular basis, because I'll be covering different topics on different days, and really they're going to be geared around you. I will leave my email address, and from this email address, if you have any questions that you want to ask me, just send me an email and I'll cover them on the webinars. And on that basis and on that note, I want to thank everybody for attending. Let me just make sure that is still there. Just bear with me for a second. Hopefully you can see my email there. If you have any questions, please email me in preparation for our Tuesday webinar, and I'll cover those, any questions that you may have. And on that note, thank you, everybody, and wish you all a great day.